The number one tax blunder that we see property investors make is not filing tax returns when they're required to do so. The financial offices can and have been more regularly giving fines for this, from 500 Czech crowns, that's the minimum, to 300,000 Czech crowns. And this is for not submitting a tax return or doing so later than 5 days after the deadline. As you can imagine, this really hurts your investment returns on that year, getting a fine like this. So what are the requirements for tax returns? Well, an SRO or Czech company must always file a tax return in Czech Republic. This is true even if they've done absolutely no business during the year, or even if they've had a loss on the books, they need to file a tax return. A physical person who owns a property must file a tax return if they've collected rent during that year. This is also true even if they have a net loss on the year. And even if they are a tax resident of a different country, they need to file this tax return in Czech Republic. The second big mistake that we see investors make, and this is often a mistake of their accountants, is not using depreciation in the accounting. Depreciation is a marvelous thing for property investors, but needs to be used correctly in order to have value. Let's look at an example of how this works in Czech Republic. Let's say you owned a flat worth 3 million Czech crowns. The government says that you are allowed to say that the value of this flat is decreasing each year. And this amount that it's decreasing, you're allowed to put on your books as an expense against income. So you don't actually have to pay any money out. You've already got the money in the purchase of the property, but you're allowed to count it against income. So in Czech Republic, using the so-called normal depreciation, the first year you can depreciate 42,000 Czech crowns. Then in subsequent years, you can depreciate 100,000 Czech crowns per year. This means you could get income of 8,350 Czech crowns without having to pay any tax on it, because the government allows you to say that you've had this expense in the value of the property going down. So depreciation is really a marvelous thing for property investors, because the government allows you to say the value of your property is going down when in most cases the value of the property is actually going up. Now, the third big mistake we see investors make is not using capital gains exemptions. There was a time when it was required for a foreigner to buy property through an SRO. But an SRO does not have any capital gains exemptions in holding property. This means if you hold property 10 years, 15 years, 20 years, when you sell that property, your net profit will be taxed at the corporate tax rate. However, as a physical person, if you own a property and you hold it for 5 years, there is no tax on the capital gains. So you can see that this would have a big effect as well on your net take home when you're investing in Czech properties.